All right, let's dive in.
Okay.
When you think about, the real engine of most economies, pretty much everywhere.
Mm-hmm. You're talking about SMEs.
Exactly. Small and medium-sized enterprises, they are the bedrock, aren't they? Driving innovation, jobs.
Building resilience.
Yeah.
Absolutely fundamental.
But here's the shift, and it's a big one. For these SMEs to really succeed long-term sustainability, it's not just a nice to have anymore.
No, it's become, well, non-negotiable, really.
And I think for a lot of people listening, maybe you run an SME or work with them, the question isn't just what sustainability is.
Right, it's the how. How do you actually do it when you've got limited resources, limited time? It's a huge practical hurdle.
So the big question is, who's actually helping bridge that gap? Who's stepping up?
That's exactly what we're digging into today. Might surprise some folks, but stock exchanges.
Yeah, you normally think huge corporations.
Exactly, but they're actually playing this really pivotal, proactive role in supporting SMEs, specifically on sustainability.
And we're focusing today on the practical stuff, the business development and advisory initiatives, how they're actually helping on the ground.
Yeah, and our guide for this is a pretty comprehensive action plan. It's from the UN Sustainable Stock Exchanges Initiative, the SSE, working with the IFC.
The International Finance Corporation.
That's the one. They've pulled together insights from experts globally, so it's a solid base for understanding what's working.
Okay, so let's start with the basics, the why. Why are SMEs so vital, and why is sustainability suddenly such a pressure point for them?
Well, the scale is just immense. SMEs make up something like 90% of all businesses globally.
90%, that's huge.
It really is. And they contribute up to half of global GDP, maybe two-thirds of private sector jobs. But it's not just numbers.
No, they're embedded in communities, aren't they?
Deeply. Especially in emerging markets. They're often key to empowering women, youth, minorities, the local economic face,
Absolutely indispensable. But this sustainability imperative, it feels like it's ramped up so quickly. Is it truly strategic, or is some of it just, well, keeping up appearances?
That's a fair question. And while, sure, there might be some greenwashing out there, for most SMEs, this is becoming deeply strategic. It's driven by real pressures.
Okay, like what?
First off, market demand. Your customers, consumers, they're asking for it. They're choosing sustainable products and services.
So ignore it and you risk losing business.
Pretty much. Then there's the regulatory side. Think about Scope 3 emissions.
Right, the emissions up and down the value chain.
Exactly. So larger companies are now leaning on their suppliers, often SMEs, to disclose their environmental impact, if you can't or won't.
You could lose big contracts. Ouch.
A major pressure point, and you don't want to be that weak link.
Makes sense. What else is pushing this so hard?
Access to finance is massive. Investors, banks, they're looking hard at sustainability performance now.
So good practices could mean better loan terms.
Potentially lower borrowing costs, yeah. And it definitely attracts that growing pool of sustainability-conscious investors. They're actively looking for these kinds of businesses.
So it's not just risk, it's also opportunity.
Absolutely. Better risk management against things like climate change, resource scarcity.
Yeah.
But also, it sparks innovation, opens new markets.
And finding good people, right? Talent.
Crucial. Especially for SMEs. Good people increasingly want to work for companies that actually care, that align with their values. It's a real competitive edge.
Okay, so the case is strong, but there's this SME paradox.
Right. Individually, maybe a small footprint, but add them all up. Collectively, it's huge, maybe 40% of business greenhouse gas emissions.
Wow.
But they face these structural barriers, don't they? Limited cash, hard to invest in new tech, hiring challenges, higher costs sometimes.
They just don't have the resources of a big corporation to throw at complex sustainability plans.
Exactly. It's a capacity crunch.
And that's where the exchanges come in, not just as gatekeepers, but as enablers.
Precisely. And it's not charity for them either. It's strategic.
How so?
Well, it expands their potential listing pool, diversifies their revenue, helps foster innovative sectors in their markets.
And supports the national economy, the broader transition.
It really is a win-win alignment. Good for the SME, good for the exchange, good for the economy.
Okay, so that's the why. Let's get into the how. How are exchanges practically doing this? You mentioned that UNSCIFC plan has 3 parts.
Yeah. Engage, enable, and empower. Engage is about building networks, sharing knowledge. Think of things like the ICC Small Business Champions Network.
Getting people talking, sharing best practices.
Right. And enable is more about providing the tools, guidance, training. You mentioned Bursa Malaysia's PLC transformation program earlier.
Or Canada's BDC Growth Driver Program, tailored advice. The JSE's Sustainability Showcase, too.
All good examples of enable. But our focus today, as you said, is empower.
Right. The direct support.
This is where exchanges offer concrete opportunities, direct help within their sustainability services. It hits those core constraints head-on. Access to finance, access to expertise. This is where the rubber really meets the road.
This is where it gets really interesting, seeing the specific programs. What kinds of initiatives fall under this Empower banner?
We can kind of group them. One major approach is really focusing on building that core capacity, getting SMEs ready for the market.
Like prepping them for potential listing or just better operations?
Both, really. Look at Athex in Greece, the Athens Exchange, their alternative market, ENA.
Okay.
It's way more than just a listing venue. It's proper hand-holding. They offer capacity building, crucial guidance on ESG reporting.
Which we know is tricky for SMEs.
Very. And they help with investor roadshows, essentially coaching these companies, maybe for an eventual move to the main regulated market. It's about that long-term growth path.
So nurturing them along? Any others like that?
Yeah, the Indonesia Stock Exchange has its IDX incubator that's very focused on IPO prep intensive training, mentoring, identifying those high potential firms.
And didn't the Philippines have something similar?
Right. The Philippine Stock Exchange has elite listing engagement and assistance program. It's free, personalized, one-on-one advice, connecting them with IPO advisors. Real practical help.
That sounds incredibly useful, taking away some of that initial fear or complexity. What about creating specific market segments for SMEs? Places where they can list more easily?
Absolutely. That's another key strategy. B3 in Brazil, their Bovespa Mass segment, is a great example.
How does that work?
It lets SMEs join the market gradually, build up their governance, their transparency over time, and get this, they can list without an IPO for up to 7 years.
Wow, that really caters to their development pace, doesn't it? Less pressure up front.
Totally. Euronext does something similar with Euronext Growth and Access. Tailored platforms for high-growth SMEs and startups.
Do they offer support programs too?
Yeah, things like TechShare, iPorty, Family Share coaching programs to boost readiness and visibility. Plus, they have specific SME indices.
And the London Stock Exchange's AIM market is famous for this, right?
Definitely. AIM, the alternative investment market. It's known for lighter regulation, letting SMEs focus on growth. The key there is the nomad.
The nominated advisor.
Exactly. They guide the company through the whole listing process and beyond. It's a crucial support role. BME Growth in Spain is another one, tailored for tech, biotech SMEs, providing registered advisors, and even a pre-market environment for training and networking.
It seems like that advisor role, whether it's a nomad or registered advisor, is a recurring theme.
It is. Having that expert guidance is critical.
Okay, we've talked capacity building, tailored markets. What about leveraging technology? Are exchanges using digital tools to help?
Yes, and this is a really exciting area. Bursa Malaysia's CSI solution, Centralized Sustainability Intelligence, launched just in 2024.
CSI solution. Okay. What does it do?
It's pretty comprehensive. It provides automated climate reporting aligned with TCFD standards.
So helps with the technical reporting burden.
Hugely. It also gives insights into Scope 3 emissions, and this is clever. It connects companies, listed or not, and even their SME supply chains, to financial incentive programs.
So it's a practical tool and a connector.
Exactly. A real digital hub for ESG integration. It tackles one of the toughest parts of the sustainability journey for many businesses.
That sounds a game changer. What about the most basic need, money? Are exchanges helping directly with the costs involved?
Yes, addressing those financial hurdles is vital. The Botswana Stock Exchange, for instance, has its Shipidi Mentorship Program, TMP.
Mentorship, okay.
But it also tackles what they call corporatization gaps, and crucially has a listing support fund.
What does that do? Defray costs.
Exactly. It helps defer those significant upfront costs, making listing a more realistic option. Ghana's alternative market, GAX, does something similar. They actually defer the upfront fees for applicants, and they also have a listing support fund, but it works like a revolving credit facility to cover initial transaction costs.
So different mechanisms, but the same goal. Lower that financial barrier to entry.
Precisely. And then you have initiatives more focused on connecting SMEs to finance, not just for listing. The Johannesburg Stock Exchange, JSE, their SME Rise initiative.
Rise.
Yeah, it involves government agencies too. They offer funding readiness training, helping SMEs get their ducks in a row.
Getting investment ready.
Right. And then capital matching, actively connecting them with investors for different types of funding, equity, debt, even grants. They also do this neat virtual speed coaching series.
Quick, focused advice. I like that. It seems exchanges are getting quite creative beyond just the traditional IPO route.
They really are. They're recognizing that not every SME is ready for or even wants a full public listing.
So what else are they exploring? Alternative financing.
Definitely. We're seeing the development of specialized debt instruments. MAV in Argentina, for example, runs a specific exchange for SMEs dealing in things like promissory notes or deferred payment checks.
So facilitating shorter-term working capital needs, maybe?
Exactly. Accessing capital without the full equity listing process. And another big trend is the rise of private trading platforms.
Like LSE's, PIACs.
Yeah, PIACs or ties private markets. These platforms aim to bridge that gap between being purely private and fully public.
Providing some liquidity, some transparency, but maybe without all the regulatory burden of a main market listing.
That's the idea, offering a spectrum of options to suit different SME needs and stages of growth.
When you pull all these examples together, the capacity building, the tailored markets, the digital tools, the financial support, the alternative finance, it's quite a comprehensive picture of support, isn't it?
It really is. They're tackling those core SME constraints from multiple angles: access to capital, building internal capacity, navigating sustainability complexities.
And it's important to remember, this isn't just, corporate social responsibility dressed up.
Not at all. It's deeply strategic for the exchanges, too. They benefit directly.
How? By growing their pipeline of future listings.
That's part of it. But also strengthening their whole market ecosystem, offering more diverse products, fostering innovation, and contributing to a more resilient national economy. It really is a win-win.
A symbiotic relationship. But are these models just copied everywhere, or are they adapted?
That's a key point from the source material. Exchanges are definitely adapting these ideas to their own specific national, regional, even cultural contexts.
So what works in Botswana might need tweaking for Brazil or Greece?
Absolutely.
Yeah.
One size definitely does not fit all. That customization is crucial for making these initiatives genuinely impactful on the ground.
Okay, so pulling this all together, what's the main takeaway for you, the listener?
I think the core message is pretty clear and, frankly, quite exciting. That stock exchanges are moving well beyond just being passive marketplaces. They're becoming really dynamic, innovative partners in this whole global push for sustainable development.
And specifically, they're doing that by actively empowering SMEs, the backbone of the economy, through these very tailored business development and advisory initiatives.
Yeah, they're directly addressing the biggest hurdles SMEs face in becoming more sustainable and accessing growth capital.
It's a significant evolution in their role.
It really is. And it leaves us with a pretty provocative thought, doesn't it?
Go on.
Well, as exchanges keep evolving in this direction, becoming these comprehensive hubs for SME support, for sustainability, how might that fundamentally reshape what we even think of as a stock market?
You mean moving beyond just trading shares of big companies?
Exactly. Could we see, even more localized, more direct forms of impact investing, maybe more community-driven capital formation happening through these evolving exchange platforms in the future?
Less centralized, perhaps more connected to specific regional or community needs.
Potentially. It's definitely something to watch, how this empowerment agenda continues to transform the role of exchanges in the economy.